Look at this, confluence of the two moving averages and the Bollinger Band and an overbought stochastic. We've got to move a little higher on the euro, and whilst we're moving higher and I'm long, I'm going to keep this trailing stop loss in mind, this 5-period moving average as a kind of trailing stop loss, and we'll see how long we can ride that upward move, counter trend move. Where can I put this one? You know, lows or highs, there's a natural line there, a low and a low, support being all along here. Now that we've broken beneath it, it should become resistance. So it takes just a few seconds to draw these Fibonacci's in, and I'll just illustrate that to you one more time. I'm just going to remove all of this. You know, and a lot of people get embroiled in this whole Fibonacci study and looking at horizontal lines and drawing trend lines and just covering their charts with all sorts of stuff and taking hours over it. And at the end of the day, they're still damn confused about where they should be aiming for. Just do it very quickly. I look at my chart. First thing I do, Fibonacci, top to bottom. That's a Fibonacci extension. I go top to bottom because the move is downwards. And I just draw it like that. That took me about 5 seconds. And then I draw my horizontal line. I say, okay, about there. When these aren't precise, it's not to the pip, it's in that region. And straight away, in about 7 seconds, I've got my setups. I've got all the moving averages and Bollinger Bands in there already. That's already there. I've got the stochastic, so I don't have to touch the indicators. All I've got to do is draw a few lines in. This takes me a few seconds, and then I'm done with that. So it's a very quick, simple process. One is if we have a spike high or a doji, I always wait for 1 more hour for that to be either confirmed or denied. And so what I like to see is, you know, another spike or a bearish candle after that to indicate to me that that first spike was a genuine reversal. Often spikes, and particularly dojis, you can see this one here is really a very small spike high. It's actually a bit of a stretch to call it a spike, but it's the candle body is non-existent. So we closed at the same price we opened here, and we've got a little spike on top, a little spike beneath, and that's more of a hesitation or a pause or a wait and see type candle. So that candle there is certainly not a clear reversal pattern. It's okay, we've paused at this level, let's see what happens next. I've talked about channel failure, and there's a good example of channel failure. You can see during the upward trend, the price constantly touched the upward channel line, making higher highs and so on. But in this last move higher, we failed to reach the channel line, the top line, failed to reach it, and that's what I call a channel failure. And if you don't reach the top of the channel and begin to move lower, that's often an indication that that moves over, and this channel is likely to break at some stage. And Mark says, I've got a few pips on the pound with IND 5 an hour or so ago, so well done there, Mark. Here's a good example. So in this case here, I can draw a trend line underneath the price action, which is moving up. So we're making higher highs, and we've got an upward trend line. But on the stochastic, we've got a downward trend line. We're making lower highs. Something like this. Perhaps not the best example, but not too bad. So on the price chart itself, we've got an upward trend line, but on the stochastic, we've got a downward trend line, and that means we've got stochastic divergence. You can do it with RSI or CCI or any of those other indicators, and basically it means that there's a good chance that if we do get a reversal signal, that it'll be a valid signal. So your question was, is it better to draw the lines on the indicator or on the chart? My answer is draw it on both and use that to find divergence, and that's really about it as far as my use of all that sort of stuff. Question, can we use 5-minute moving average cross on the close and open of the candle to exit the trade? Yes, you can, Ali. I talked about that. In fact, you might have asked me that a few weeks ago, and I pointed out the 3 exit methods that you can use when you're trading on 5-minute charts. And I talked about the 5 moving average. I talked about the crossover of the 2 longer moving averages, and I talked about aiming for, in fact, there are probably 4 methods, aiming for a target, and I also talked about the top Bollinger Band, the opposite side Bollinger Band. So after that big move that we caught on the 4th, fantastic trade, but since then there's been nothing. Alrighty, you can see the benefit of waiting for a spike high to confirm. Just quickly while I'm talking, you can see that we've now moved above the high of that previous spike and would have been stopped out if we'd sold on that spike. That's why we always need to wait for a confirmation from a spike high. We're beginning to move up towards that 36.80 level. If you're long on the euro, 36.80 is a great place to exit. It's one of the key numbers, the 20 and the 80. It's also where the 200 moving average is. It's also where this previous support resistance line is. And we're probably going to get a bounce off that lower. And 36.75 we're at right now, 75.80 somewhere around there. I'm probably going to just see if we can get up to around about 36.80 and close my trade, and you can do with that what you want. Okay, so what I'm going to do here is I'm going to sell the pound and I'm going to buy the dollar yen. I'm going to explain to you why. I'm going to sell the pound right now at 57.10. And I'm going to buy the dollar yen at 89.90. So short 57.10, and the stop will be where I made that note at 57.35. So that's a 25 pip stop loss there. Based on the fact that we're still just closing beneath that very powerful horizontal line, the weekly direction's bearish, we're overbought on the stochastic, we've touched the top 100 period Bollinger Band and also the top 200 period simple moving average. Dollar yen 89.90. Long, and I'll explain why in a minute. So long 89.90, and the stop I've already written down on the bottom of the page there, and it's 89.65, and that's also just a 25 pip stop loss. So you can able to get in both of these trades with a small stop loss and nice setups. And that's the sort of thing when I look for a no-brainer. I'm looking for either a small stop loss or a dramatic reversal on the pound. All right, so there's 20 pips on the pound, getting ready to close it now. Almost 25 pips, almost 30 pips. Come on. Anyone got 30 pips there? All right, so I'm closing now. Okay, well done. 30 for Eddie. I got 28. Now, let me just explain. Okay, well done. A few other 30s, 27, 28. Let me just explain once again why I'm getting out of this trade or why I'm out of it, and that's because the UK news is in 9 minutes' time. Now, normally I don't worry about the news too much because it either confirms or it doesn't the trade direction. Okay, Daryl took 22 and I took 30. So normally I don't worry about it too much because if the news comes out and it reacts technically as it looks at the moment, the pound could well move down quite fast and quite a long way. Okay, a few more 30s, 21, 22. But the problem is the broker spread will move out to 20 pips or 30 pips, 27 for Aaron, 20 pips or 30 pips on the pound with our end, and some of the brokers move their stops out, their spreads out, and so it makes it impossible to hold on to the trade. So that's the reason why, and that's the only reason. But what's nice is that there's no risk more on the day now. And if you want to, in fact, close your dollar yen trade for 10 pips, I know it hasn't really moved enough to justify closing it, but if you close that, you'll end up with around 40 pips for the day, which is a good start to the week, and particularly after taking a good profit. About 35% of you took a good profit on the euro a little earlier from that long trade from yesterday's report. So it would be an excellent start to the week if you got that. If you didn't get it, well, you can probably you'll be able to get 10 pips out of the euro shortly, out of the dollar yen, and that would mean a total of around 40 pips for the day, which is really cool. But I'm going to hold on to it, and I'm going to see how this goes. I've got no risk for today, and I've already had a good profit earlier, so this would just be a bonus.